Well, obviously, because it's going to have an effect on the P&Ls because it's going to take a bite at them. But certainly, I mean, what has happened right now with the interest rates, it's that we have come back to normalization. No? As a matter of fact, what has happened is that in the last 6 years, we had negative interest rates, which is what's not normal. No, and I always say the same. I mean, retail banks don't need very high interest rates; they need positive interest rates. No, because when they're negative, we cannot pass through that negative rate towards our retail depositants. No, so we suffer it only on the asset side of things, and therefore margins are very much compressed. I think we are in a scenario now where interest rates are coming back to normality and actually going to be lower than in long periods of time. But not all the income that we're going to receive on the income, it's going to be trespassed to the bottom line, because obviously we have uncertainties regarding the macro, and we may be seeing an impact in terms of asset quality and cost of risk. Not this year, I think, but it could happen in 23 because we already have quite some uncertainty.
Everything out there in the financial markets. Higher rates are a double-edged sword, aren't they, Leopoldo? I mean, obviously, good positive trickle through for your net interest margins. Not necessarily good for people who are exposed to the higher cost of capital, whether it's through, trying to get a loan or a mortgage. You had good growth in your mortgage business, but what is the outlook for mortgage growth for you when you consider that consumers are going to be faced with those higher interest rates, and also what we're going into a difficult economic period?
Well, I think it depends on the countries and the geographies. On the one hand, obviously the macro is uncertain and we don't know what's going to happen, especially in 23. I think we have quite a good visibility on 22. And my opinion is that we will just not have time for things to unravel badly in 22 in any case. Spain's a little bit different. I think Spain, we've had a huge deleveraging of the private sector in the last, let's call it 12 years, where, households were indebted close to 86% of GDP, and now it's back down to 57. So, and the European Union is above that rate. So the starting point is much better situation. We've seen unemployment rate going very well. We had the latest data released as of yesterday. Basically, in terms of affiliation to Social Security, we are just about reaching the maximum of 2007. House prices are going up significantly still. As I said, most of the mortgage clients that we have been paying their mortgages for a long time. And therefore, the loan part of the loan to value ratio has gone down and the value has gone up. So I really don't see a lot of struggling in the very short term. Now, if inflation keeps on going for a very long time, that will be a different scenario. But as I said, it's still difficult to see, and that will, in any case, happen in 2023.
I love it when we